Welcome back. As you can see, we are really enjoying this conversation with market veterans Madhu Khela as well as Sunil Singhania. We've discussed the retail revolution. We've discussed the immediate sort of areas of concern and triggers for the market. Now let's look at some of the biggest wealth creators of the year and some of the biggest wealth destroyers as well. And then we'll get our guests to comment on whether they still make sense for our portfolios or not. Nimesh?
So, I've not looked at this year, but I've just looked from the COVID lows.
Okay.
And again, Diwali is all about prosperity, about making big money, creating wealth. We have the two, biggest voices to tell us and guide us how to create wealth, because they've done this all these years. So I just looked at Nifty, the indices, and some individual names as well. If you look at Nifty Sensex, they've given 200% return since the COVID lows. The mid and small cap have actually doubled, like double of what they've done. So 400% return in the mid cap and the small cap indices. So that's been the massive outperformance we've seen in the equity markets. Now, in terms of individual stock, we normally don't talk about some of those names which have been massive wealth creators in the last 4 years, right? Autumn Investment, Lloyd Metals, CG Power, Anantraj, which Madhubhai knows the company very well, Jai Balaji Industries, Elcon Engineering, Jupiter Wagons, Titagar, and HBL Power. These are the few names. The percentage returns will be seen on the screen. So massive money, wealth has been created in these kind of stocks. I've just identified 10, 12 top gainers, so to speak. In terms of big losers,
4,940%.
Absolutely. That's the kind of return.
49 times.
Yes. That's the kind of.
That is the 10th number.
That's the 10th number. So imagine the kind of wealth that's been created in so many stocks. But on the other side, some of the big losers since the COVID lows, right? Paytm has been a bit of a wealth destroyer, so to speak. Rajesh Exports, Yes Bank has been a big disappointment. Zee Entertainment, which a lot of people used to track a lot, has been a big underperformer, and so is Delivery as well. So these are the few names which have not done well. But while I was preparing this list of the biggest wealth creators, Madhu, a couple of names really stand out which you've been part of and you've seen the journey, like say Titagar, or maybe Sunil would have been part of so many of these multi-bagger ideas. How do you first identify and how do you ride?
One. Sunil is part of the rest.
Part of the rest, nice. So, Madhu, again, from a viewer perspective, while we all look at short-term, near-term trends or whatever, but from a real wealth creation point of view, how to identify these names, and then how do you sit on to it for a longer period of time to make real money? What is the inflection point for such companies?
So I want to remember my friend Rakesh Jhunjhunwala, for two reasons. One, I think he was the only person who predicted this boom in the retail money, right? He was talking way 10 years back.
10 years.
कि इतना पैसा आएगा, इतना पैसा आएगा, ये बाढ़ लग जाएगी. So we must pay the tribute to him.
Absolutely.
Right? Second thing, he taught me one thing, that if you want real multi-baggers, then you can't have time constraint.
Yeah.
You can't think that you want to make 10 times return in 3 years. Yeah. You have to allow time to build up over a period of time. It may happen in 3 years, it may happen in 5 years, it may happen in 7 years. But if you are making 10 times return, it's still a large money, right? So I would say my first
but it's a journey, right, Madhu?
Yeah, my first criteria,
Yeah.
is that whenever I am making an investment, I am normally not restricting in terms of the time.
Sure.
Second, these companies which really become multi-baggers, you have to really buy them really cheap, right? And when you buy them, at that time, 100 out of 101 people will tell you, don't do this.
Yeah.
But that is another characteristic of investing, right? Investing is never a consensus game, right? Third, wherever you have seen really big money being made, it has to be a part of a larger theme. Very rarely individual stocks on their own stream do well. Like, because railways did very well and that was our call. Titagar Wagon, Jupiter Wagon, so many of these companies did well. Because defense did well, so many of defense companies did well. So it has to be part of a, and then, if you get them at a right valuation and you get a right entrepreneur, right, it's a lethal combination. And then you have time by your side. That is when you really make return. So I would say, Nimesh, I'm being honest, Diwali day, I also did not understand for many years. For me, market was a means of making income. ₹1 मिल गया, ₹2 बेच दिया, अपने पैसा बहुत बन गया. Maybe this is the first time we are also holding on to stocks even after they have gone up 10 times, 20 times, right? Because now that experience is there. Now only time will tell whether it was right or wrong, but at least till now it has worked out well.
Sunil, if you want to
Stay the course as long as the story is intact.
Exactly.
And play big.
Stay the course.
Yeah.
And just because PE multiple has become from 20 to 25 or
Yeah.
25 to 30, it's not a reason
To sell.
always to sell. You have to see real euphoria or some really bad thing happening to a company or a sector for you to be able to sell this
Set up.
company.
Yeah.
Sunil, when you've been part of so many stocks where they've become multi-baggers, if you can just explain with one example on how you identify and how you sit onto it, and what are the things that you'll watch out for from a pure viewer point of view.
So, one thing which
The
was
writer said in Reliance Mutual Fund,
Yeah.
Sunil's name was Sunil Multibagger Singhania.
Nice.
Madhu is being modest. Madhu हमारा guru है. He is today decided that he wants to take me.
But your secret.
In your list,
Yeah.
one thing which was very interesting. See the world, when we talk about US markets, we talk about 7 stocks, which are all technology stocks. And all your stocks which you mentioned in India were all
Domestic. Absolutely.
economy,
Absolutely.
brick and mortar stocks.
Yeah.
So I think the moral of the story is that it's not only in very high tech or very exotic, sectors or companies you make returns. I think if your base is right, if your perspective is right, and if you identify both time, company and valuations right, I think you are home. I think how you lose money if your time is wrong, your company is wrong, and your earning expectation is wrong.
Yes.
So I think when you talk about companies, I think the best way of identifying them is in the worst scenario for that sector. Are the companies still generating some returns and some ROEs? Because the moment the sector changes, I think the company which is the strongest in that sector will do very, very well.
Okay.
And I think it's all about then taking a call whether, like Madhu mentioned about railways. If the government would not have focused on railway, even if the company would have been good, neither the opportunity would have been there nor the PE multiples would have been there.
expanded.
So I think there is no formula as such. But for us, the clear formula is that you have to identify a company which in the worst scenario survives and makes some returns. And then in the good scenario, it will do very, very well. And the other thing which I would like to mention here is that, obviously in India there is private equity which have done very, very well. I think one thing which at least pains us is that all the large returns have been made by foreign investors through the PE funds.
Yes.
So we are very clear. I think we want to give Indians also an opportunity of investing on the PE side, because why should Indians not make money? The way we have made money in the secondary market, let Indians only make money even in the unlisted space. Sure. So I think that space, Indian investors have not been able to make, and that doesn't get captured in your returns.
Exactly. True.
But that is also a space where you're working and it's done well.
I
very
think
well, last
many
couple
more
of
will
years.
come, but I think there again there's an opportunity because the technology side, it's not listed. So this when you give the returns of 30 times, 40 times, the unlisted companies don't get captured here. I think those returns have just been captured by the foreign.
We'll take
Neeraj, I would
a.
like
And
to
we're seeing
mention
that
one more
change.
thing. See, this process, after 20 years, it looks very easy when you put all these data now. But to be able to buy a stock and be able to see the volatility.
Exactly.
And yet to be able to face markets where the markets are down 2,000 points, your stock is down 30%.
Yeah.
Where does that come from?
Correct.
That only comes in the market. Always, your patience will be tested, but your conviction will be rewarded.
Yeah.
And when you are convinced, you are suddenly convinced in consensus. Sure. It's a rare conviction. It's your own individual conviction. True. So the quality of work which you do into these ideas and the kind of thematic understanding which you have about this company, that is what allows you. Because if you look at last 20 years, best of the companies would have fallen 30-40%, maybe 5-10 times, including companies like Titan, Divi's, Infosys, right? But who has the guts to really see that kind of fall and still be convinced that I want to hold it for a very long period? That is what truly determines whether you are into that multi-bagger return.
So conviction is what matters when you're talking about creating
Conviction
real
and
wealth.
preparation.
Conviction and preparation, conviction for the right kind of themes and the right kind of companies, promoters and stocks, right? In fact, after the break, we talk about exactly that. What are these two gentlemen currently bullish about in terms of the next big themes for the next decade or so? We'll discuss that in just a moment.